Hello, Sundar here from Mindful Finance. Every investor's journey starts somewhere. Mine began with mistakes, but those mistakes turn into lessons. Whether you are trading intraday or into FNO or considering long-term investments, today I'll walk you through 8 essential steps to master not just the stock market but your entire financial life. So, ready to take control? Let's get started. Most of us start by chasing profits, intraday trading or futures and options. I did too, and I lost so much money. But many quit here, calling that stock market as a gambling. But those who persist and pivot to disciplined investing see the real potential. If you are here, you are already ahead because you are learning, and that's the first step toward financial success. Step 2: before anything else, figure out your financial baseline. What does it cost to cover your necessities like rent, groceries, and utilities? So then start budgeting. I prioritize my needs first, like bills, insurance, savings, before spending a rupee on anything else. Every time you get paid, allocate your funds wisely. Whenever salary comes, make sure to plan accordingly. Step 3: I have been there. Skyrocketing credit card bills, buying gadgets I don't need. So debt compounded but not my wealth. So I tackle my high interest debt first and learn to invest instead of splurge. Now I use banking apps to automate investments with every payment. I'm not sure if you guys heard about some, I don't want to take the name of the bank. Some banks are there. Whenever you make a transaction in your UPI, you can set your own set of amount to allocation to your investments. Like for example, if I swipe 100 rupees, every time I swipe, like 50 rupees will be allocated to a mutual fund. Even if you pay 2 rupees, 5 rupees, or 50 rupees will be allocated. So likewise, whenever I do a spending parallelly, I invest something for that. So it's seriously a game changer. You can try it out. Step 4: create an emergency fund. So life throws curveballs, guys. A financial cushion can turn a crisis into just another bump in the road. Aim for 3 to 6 months of expenses in an emergency fund. It's not just preparation, it's a peace of mind. I'm telling you, it happened in my life. It's a real time. When you have this kind of a cushion, you will get more confident. Don't worry about your manager is scolding you or manager is giving more stress to you. You will start to speak confidently in your meetings. Wherever you go, you will have that confidence because you have a backup now. So who cares? Like whatever manager says, or if they try to fire you because of your saying something, doesn't matters. Now you will get the confidence, right? So that is what this question is all about. Step 5: start investing and stay disciplined. So now that we tackled debt, let's talk about the next crucial step: investing wisely. But before we dive into strategies, let me share a story about one of my biggest lessons in investing. A lesson I learned the hard way. Back when I started trading, I was confident, maybe overconfident. I just learned some basics about technical analysis and thought I had the market all figured out. So one day I found this stock that looked like a guaranteed winner. The chart seemed buy, and I thought this is my moment. I jumped in with a good portion of my savings and waited. At first, everything was going. So that is what the gamblers, not gamblers, that is what I'm not sure how many of you face that. Most of the traders or most of the person who comes to the market, when they take the first trade, they always win. I'm not sure how many. I've seen that record. Okay. Personally, I have faced and I've seen others also. First trade is always a winning trade. I don't know how it happens. So that it creates a overconfidence in your mind. So here, same thing happened. Stock was going up and I was already daydreaming about my big win. But then out of nowhere, it started dropping. And this was a crucial drop, and it was so fast I got panicked. I didn't have a plan, no exit strategy. I didn't even know how much I was willing to lose. I completely froze. By the time the trade hit my stop loss, not only I had the stop loss in my mind, but it was not in the system. It was just it hit the stop loss. So already I had lost a lot more than I was prepared for. But I didn't stop there. I thought I'll win it back with my next trade. So I froze. By the time the trade hit my stop loss, I had lost a lot more than I was prepared for. But here's the kicker: I didn't stop there. I thought I'll win it back with my next trade. It's like a revenge trade. So I jumped into another trade. This time, no analysis, just desperation. Just I want to take a revenge. How can the market do to me? I'll win this back. The second trade, it wiped out my months of savings. I was devastated. Looking back, that moment taught me something priceless. Investing is not about luck or emotion. It's about discipline and strategy. I realized I wasn't just fighting the market, I was fighting my own psychology. I needed a plan, not just for entering a trade, but for when to exit, whether I was winning or losing. That's when I started journaling. I documented every trade, every mistakes, and every lesson. It might be boring, but over time, I saw patterns, not just in the market, but in my own behavior. That shift from emotional trading to strategic investing changed everything. And that brings us to step 6: invest wisely. The market rewards patience, discipline, and solid plan. Start simple, low risk investments like index funds or retirement accounts. Remember, it's not about timing the market, it's about in the market. It means about time in the market. Focus on consistency. Even small, regular investments can grow into something significant over time. And most importantly, always have a strategy, whether it's for long term goals or calculated short term trades. Before spending on leisure, I allocate money to savings and self growth. I not only wake up at 3:30 a.m. daily to exercise, read, and write. I have written 3 books till now, and I'm writing a fourth book currently. So, this discipline doesn't just improve your finances, it transforms your life. Your biggest asset is you. So invest in yourself. 3 years ago, I created a vision board. So this is step 7, guys. Be focused. I created a vision board and change my habits. Define your goals, whether it's buying a home, starting a side hustle, or funding education. Clear goals give you a purpose for your money, turning dreams into actionable plans. The step 8: review and adjust regularly. Your financial plan is not set in stone. So review your finances monthly. Are you hitting your goals? Do you need to adjust your budget? Life changes, and so should your approach. Consistent reviews keep you on track. So these 8 steps have reshaped my financial life. I believe they can do the same for you. Which one are you starting with today? Let me know in the comments. If this resonated, then like, share, and subscribe for more mindful financial tips. Remember, every financial journey has ups and downs. What matters is staying disciplined and learning along the way. Here's to making 2025 the year we achieved financial freedoms together. See you in the next video. Thank you.